Welcome to Profit and Prosper, a podcast for entrepreneurs who are ready to make some money while doing what they love. On this podcast, we're going to pull back the curtain and talk about all things business and money. But I promise you, this is not your typical boring numbers talk. I'm your host, Sarah Young, a CPA and CFO with over a decade of experience in finance, business, and leadership. I'm going to share everything I've learned from helping my clients grow more profitable businesses and keep more of what they earn while growing my own successful business along the way. You'll feel empowered and confident that you too can grow your wealth, live a rich life, and have an impact. Stick with me and you might even start to think that finance is fun. Let's dive in. What's up, y'all? Welcome back. This is episode 66 of the Profit and Prosper podcast. And this week I have an interview with one of my clients who has been with me for at least a year and a half at this point, Jasmine Sims. Jasmine is the owner of Sims & Co. Design, where she creates functional and beautiful homes as a full-service interior design studio. She's in Charlotte, North Carolina. And on top of that, she has other ventures, which is why I really wanted to have her come on and talk about what she has going on. So you will hear her in this episode talk about how she started her business, which she does, on the side of a full-time job, of a full-time career where she is also highly successful. She, in the last year or so, set up or purchased and renovated and got designed a medium-term rental property that has been going well. And she's got other ventures and other things up her sleeve, which is why I wanted to have her come on, because she has such a great mindset and plan. And she's just very aware of the need to be able to, save and invest more of her money, taking advantage of the fact that she has a job. Not saying that that's necessarily the path for everybody, but she's taking advantage of the fact that she has a high income to get these other ventures set up earlier than a lot of people generally do. So I think this will be really interesting. You'll hear her talk about what made her start her business, what got her into real estate, what her long-term goals are. We talked about both of our net worth goals, the reason that she's doing that, the things she wants to accomplish. So I think this will be really interesting for you all to hear from another business owner, another real life person about what they're doing in their business and in their life to save and invest, build up their assets, and ultimately to create passive income. So I hope you enjoy. Welcome back, y'all. I'm really excited to have Jasmine here. Jasmine is one of my clients. She's been with me for it must be a year and a half or so now. It's crazy to think about. So I'm so glad you're here and you're going to tell your story. Thank you for being here.
Thank you for having me.
First question, as always, tell us a little bit about your story and what you do and how you got into it and just all the things that you have going on.
So I am in corporate America. So I work for an investment firm, currently serving as the head of their legal operations function. So a lot of business management stuff for our legal group. In addition, early last year, I took on the responsibility of being a real estate investor. So owning a property that is out of state, which adds a bit of complexity, but nonetheless has been a fun experience. I also early last year started an interior design business and have been really focused on families who are going through life changes and want to have their home reflect where they are now. And then I'm exploring other ventures to continue to grow, my impact, my net worth, my financial security. A couple of things are currently in the works, hopefully coming up soon, but I'm really excited to be able to have this opportunity to do a number of various things and really grow in my skill set as a business leader.
So your first thing outside of corporate life was your interior design business, which you have recently rebranded Sims & Co. Design, correct?
Exactly.
And what was it that made you decide to start that as a side hustle?
Yeah, so I had been doing interior design a bit as a hobby for 10 years. And, I had my corporate job is wonderful. It's fabulous. But, I had a moment where for me, it was like, this can't be it. This can't be the only thing that defines me when I look back on my life. And I love finance, but it's a passion. It's not the passion for me. And so really starting my interior design business was designed to help me harness that creative energy in a different way. And so, when I looked across the things that I love to do, it was just sort of a no brainer that I would start an interior design business.
And that business now, today, a year and a half later, looks wildly different than it did a year and a half ago.
Yes, it does.
So because I remember talking to you at the very beginning and being like, you are just wildly undercharging for what you do, which so many people do. And we've talked about this on multiple episodes of this podcast, but I always find it interesting, especially for people like you, who I would say don't quote unquote need the money from your side hustle to feel like you then have to undercharge to get clients, but you don't need the clients, right?
Right.
And so talk to me about like, how did you shift from doing that into being, tell me about like the offers that you have now, like the structure that you have, and like what really caused you to make that shift?
Yeah, it's a great point. So when I first started the business, I was trying to do it all. So I wanted to do virtual design, full service design, selections for home builds. So I wanted to see what stuff, but I also wanted to, you're starting the business, particularly interior design is such a visual business. You want to build your portfolio. And that's what my goal was the first year. The ironic part is when you do undercharge, you end up harboring some feelings of like regret, right? Because I had this belief that to what you mentioned, I could undercharge because I don't need the money. It's really sort of a fun thing for me. But then in undercharging, you get the clients that don't make it as fun for you. So it's a cycle that you fall into when you feel like when you feel like you're doing something as a hobby or as a passion. And then two, when you are thankfully in a position where you don't need the level of income that you need to sustain yourself. The other thing that I found was I had to make it a business that was enjoyable to me as well. And so what I realized was that the virtual design stuff, as much as it's rewarding from a creative perspective, a lot of people, unless they have a project management lean, actually don't implement the design. They get the design, they have all these grand plans to implement the design, but they actually don't implement the design. So I didn't feel like I was really adding value in the way that I wanted to. And so I shifted from virtual and full service to just full service. And that enabled me to feel more confident with charging a higher price, really defining and clarifying what my offer is. And then also giving me the reward that that I wanted, which was to see people in well-designed homes and to see the final product, to have a role in the final product, and to manage the project from start to finish. And so, the business really evolved in terms of my offers, and that enabled me to feel more confident in what I was charging. The other thing that I did was change the branding. So I went from a brand that was just about me and who I was. It was, sort of a name that was reflective of Jasmine, to Sims and Co design. And so the and Co is about growth of that business as well as other ventures beyond interior design. And so it just sort of mentally gave me that boost that I needed to say, hey, I'm actually an entrepreneur. I have multiple ventures, or I can have multiple ventures. And here's what that looks like.
So many interesting things you said. So number one, I thought it was interesting that I said, if you don't need the money, why would you undercharge? And you said, well, I don't need the money. Why would I charge more?
Right. Right.
That's such an interesting mindset shift, right?
Yep.
Yeah. Yeah. No, I know that's how you started. I think that's what a lot of people do, but I think there's a lot of guilt there. I think that speaks a lot to people's mindset. And probably like talking yourself into this corner of like, who's going to pay me because I don't have a portfolio, I don't have a background. So I understand a little bit of that, but like increasing over time. And then it sounds like ultimately you had a realization that you were working with clients who weren't really a great fit, doing work that wasn't really a great fit for what you wanted to do. And so now you can be more choosy about the things that you do.
Right.
Because fun fact, I remember asking you several months ago, like, do you do virtual design? Because I'm okay to like order things and like do the painting and whatnot. I just like cannot put the room together in the right way. And so you were like, no, I don't do that. And I have so much respect for you saying no, because it can be hard to maintain boundaries, especially when you know and like somebody, right?
It's funny because since I have said no, the people who have come to me to ask for virtual design are people that I know can do it. Like,
Yeah.
I know they have a project. I know they GSD. I know they have this project management mindset. I know they can like deliver on it. And the hardest part has been saying, no, that's not my offer.
Yeah.
And so a lot of it is the mind shift to stick with what you have committed for yourself. As much as I want to help, it's
Yeah.
a benefit to stick with what I have committed to.
Are you ready to create a profitable business and use that cash flow as a fire starter for building your wealth? Since you're listening to my podcast, I'm guessing that you probably do, but maybe you aren't sure exactly how this would work for your business or if it's even possible for you. But listen, I am here to tell you that it is possible because I have worked with so many women business owners who have done exactly that. You can pay yourself a 6-figure CEO salary and get yourself out of the feast or famine cycle where you're worrying about cash flow all the time. You can create a profitable business model that allows you to outsource and delegate so you can take time off from your business while still growing to the next level. And you can use that cash flow to start building a 7-figure portfolio of retirement, real estate, or whatever else you're interested in. If you're an established online or service-based business owner who'd like some hands-on CFO support to increase your profit margins, build your business to the next level, and grow your net worth using that extra cash flow, then the Millionaire CEO Incubator is exactly for you. The Millionaire CEO Incubator is my signature 6-month group coaching and done-with-you hybrid program to help you map out and implement a plan to turn 6-figure cash flow into 7-figure wealth. We take on a handful of new clients each month by application. So if you're ready to change your money story, go to profitandprosper.co/apply or the link in the show notes and fill out the quick application. It should take no more than 2 minutes and we'll be in touch. Now let's get back to the episode. Let me revisit all the things you have. So you work full time.
Yes.
You have a side hustle. Well, you have a business, right, that you manage on the side of your main job. I don't know at this point if I would still say it's like a side hustle, because to your point, like you're trying to brand it as like your business and not just like a hobby, like thing for fun, right?
Right.
And so you have your main job, you have your design business, you have a rental property that is out of state, and then you have a whole host of other things that you have percolating that you're working on in the background. And so one of the questions that people ask me that I feel like you can probably answer is, how do you manage all of those things? Because I think when I talk about investing, like I just did a workshop a couple weeks ago with a group of women business owners, and I was talking about this idea of like your end goal, like how much money you need to be able to retire, creating passive income to pay the bills, and how you have to actually invest into stuff to create that passive income. And one of the people asked, like, how do you manage all of that? Because it feels like doing these investments takes a lot of time. And so can you answer that question?
I can in theory, but in reality, it does take a lot of time. I think people want the easy answer of, how do you manage your time in a way that makes it easy? Or how do you manage your time in a way that like you reduce your time and it's really hard to do so, particularly when you're starting a venture, right? And so what I've started to do really from a time management and prioritization perspective is figure out what I can outsource. Like that is fundamental. So when I found you, it was very clear to me that I didn't want to learn accounting. I have my MBA, I've done the requisite classes, my eyes glaze over. I didn't want to do the accounting or the tax, the CFO type of capabilities, even though I can, right? I am by trade in corporate America, I am a corporate finance leader. And so I can do it. I just don't want to for myself, right? Because I'm not going to be as objective. And so, finding you was to really find someone who knew what I wanted to be and knew where I wanted to go, because you have those similar interests, and trusting you with the things that I don't want to do, that you love to do. You
Well,
love.
I don't know about, I'm just kidding. I delegate too.
Yes, you and your team
Yeah.
you have that expertise that I just don't want. So that's been a big piece, is the outsourcing. The other thing that I've done is I've just committed to myself, like, very tactically. Sundays are not for, they're for me, they're not for my business ventures. Wednesday nights are for me, not for my business ventures. So, and that gives me grace to say, okay, if it's Tuesday night, I have to do a design concept, then I'm going to do it, because I'm not going to do it on Wednesday. So I've gotten more accountable to myself in terms of time management. And then you have to recognize the sort of cliffs. And when I got my investment property, one of the things I quickly learned was that passive income to me is really not passive to start.
Yeah.
You don't buy the property and then put it on some site, right? There might be some fixes if it's a fixer upper there. You gotta buy furnishing if you're doing a short or medium term rental. You want to do the placement of the furnishing. These are things that I enjoy doing because of obviously my interior design business, but you got to find reliable handymen. You got to find reliable sort of teams on the ground, particularly when you are out of state. And so it's a grind at the start of it. And then once you put all those systems in place, you can then let it run, not totally by itself, but with a little bit more flexibility in your schedule. So, I've just sort of recognized when I'm in those periods of like, all right, I got to put my head down. It's going to be a rough couple of months, but here are the systems I need to put in place in order for us to get over that hump.
So if looking ahead, if you're like, I want to buy another rental, you got to plan it for when you can get it done, because otherwise you're paying all the fees of letting it sit there while you get any reno, you get the furniture, all that stuff, because you're not doing like a traditional rental. You're doing a medium term, like not Airbnb either, but like medium
Right.
term for like travel nurses, people like that. Right.
Mm-hmm.
I
Exactly.
think it's funny that you said passive income isn't really passive. And this is something I think is really interesting. It's like, there's all these gurus out there who talk about like real estate, for example, and they like to pretend that it's passive. But my husband and I have had rentals. He has a real estate background. His main job, if you could call it a job currently, is real estate investing right now. And like, it's a lot of work to find the right deal,
Yeah.
to get it under contract. Like finding the right place takes a lot of work. It doesn't just like happen upon you, especially in a market like Charlotte, which is why you went out of state, right? Because Charlotte is so crazy with real estate. To like getting it fixed up, doing all the things, like it is a lot of work, but then long term, it can be a really great source of income, right? I think the only true passive income is if you invest in retirement and maybe a brokerage account and just let it sit, right? Not trading, which I don't think people should do anyways, but like that is the only true passive income. But there's just so many restrictions on that money that, I'm not a huge fan of putting all of your money there if you're like you and me and want to retire early,
Yeah.
right?
Exactly.
Okay. I want to talk about like the rental because I think it's really interesting. But before we do that, what is your goal? Like I talk about like having that end goal of like, what is the money for? Like, why are you doing all these things? So tell me what your goal is.
So my goal is to be retirement ready by the age of 50. And so that doesn't mean I'm going to retire, but that means that if I want to, I can, right? That goal exists for a number of reasons. Personally, my grandmother passed away when she was, on my mother's side, passed away when she was 54. And like she passed on a Sunday and she was supposed to go to work on a Monday. And so that is just not, that's not, it's not how I want to live my life. Right. And she did, the best she could. I'm not saying, downplaying that, but I wanted something different for myself. And so really thinking about that, and it's funny you mentioned, investing is the passive, is one of the only passive ways. I totally agree with you. So when I think about what I needed to do to be retirement ready by 50, it really boiled down to defining what would be my net worth that I needed to have to feel comfortable at the age of 50 retiring.
I remember having that conversation on one of our group calls. I remember having that or talking about that. And you and a couple other people, I saw your heads explode a little bit.
Exactly. So, and it's funny because I think people say oh, I want X amount of I want my net worth to be X before I retire. For me, it was well, what do I want to do in retirement, right? How do I want to envision my retirement? What do I know about myself? I know that I like nice things. Is that going to change in retirement?
Nope.
No, it's not going to change in retirement. So my net worth number is probably a little bit higher than what it would be for someone else who um, doesn't spend like I spend, to be honest. And so
are you okay? You can say no. Are you comfortable sharing what that is?
I am, but
I'll share mine. Mine is 4 million.
I think mine is 4 million. Let me pull it up.
I'm just curious,
it's 4.5 million. It's between 4.5 and 5 million.
I think it's really important to say those things out loud and it was at first uncomfortable for me to share because I think people don't realize $1 million does not go as far as you think it goes anymore. And I think I saw this stat the other day, the average amount that people have in their retirement accounts when they're retirement age is $650,000, which, if you do, I'm going to pull out my calculator. What is that? On an annual basis, you could probably get safely 25 grand from that in cash flow, which is $2,000 a month.
Yeah.
And then, people just always assume when you retire, you're going to be in a lower tax bracket, which just to say bluntly is you're going to be poor because that's what most people do. And we're not going to do that. Right.
Exactly.
So I love that you said, I like nice things because I think this is a great point. You are not going to just say oh, I'm going to suddenly cut my monthly cash flow, my spending in half or cut it down to 25 for no, you're not. And so we're going to plan for that.
Right. Right. And it's better to admit that to yourself. For me, it was better for me to admit that to myself now versus 10 years from now when I'm several years away from that number and then having to figure out how to beef it up because, I know now I'm realizing that I do have that desire to live that way in retirement. So, back to sort of thinking through the net worth goal, I'm pretty obsessive about my finances in terms, I have this spreadsheet that's crazy that I look at on a quarterly basis I do my net worth, I do my assets, I do my debt, and then I figure out strategies on both sides. But in order to, I have that net worth goal, but I wanted to back into what would assets need to be and what would my debt look like, right? With everything that I aspire to do. And so what I found was, to your point, I was at a point where I was maxing out my 401k, I was maxing out my HSA, I have a brokerage account, that was doing well, but all of those are invested. They are different investment vehicles, but they're invested in the same asset class.
So what that means? Tell me real quick what that means.
Yeah. So your 401k obviously is your retirement account. So it's a vehicle for you to retire. It's a vehicle that is regulated, has very varying rules. It's offered to you by your company. your HSA is your health savings account, and that is another vehicle that is specifically designed for your healthcare expenses, both now and ideally in retirement if you don't draw on it. And then I have a brokerage account that is a taxable account that sort of I won't call it a savings because it doesn't have savings, but it is more liquid than a 401k.
Meaning you can get the money out easier because
You
there's no restrictions on it, right?
There's taxes, but no penalties. So those are different vehicles for investing. Those are different sort of vessels for putting your money in different pockets. But across all of those vehicles, I am invested in equities, right? Mostly. And so,
which is stocks, index funds, right?
Stocks,
like
funds, ETFs.
You buy the S&P 500 index fund within your 401k, your HSA, and your brokerage account. So you're really doing the same thing. Exactly. And so it's not diversified.
Exactly. You're diversified in your purposes for these accounts, but not in the actual assets. So if you're investing in the S&P, which I am, if it tanks in one vehicle, it's going to tank in everyone. Right.
You could argue that the S&P, like an index fund, is by nature diversified. And for those listening who don't know what I mean, an index fund buys, like the S&P 500 is this one of the, main markets, right? The S&P 500 index, they buy shares of all of the companies on the S&P 500 index fund, but you're still going to be tied to the market.
You're still tied to, this is where my asset management background is going to come in. You're still tied to basically the systemic risks of the market, right? So whatever happens to Apple versus Duke Energy, those are differences in the company equity profiles. But if the inflationary period is taking an impact on the market as a whole, then you're diversified in the companies for sure, but you still have that similar risk of the being in an equity market, right? Whereas if you're invested in equities and real estate, you may have there's a different market risk for real estate that may or may not exist for equities at a given point in time.
Right. So you looked at your target net worth number and you said, I'm putting money into my 401k at my job and my HSA and putting money into the brokerage account, but ultimately you wanted to have that passive income in the future coming from multiple different sources and not just the stock market.
Exactly. And so I'd always known when I looked at my sort of what the assets needed to look like in order to achieve my net worth goal, I'd always had a line item for investment properties. So I'd always known that would be an investment that I would pursue. It was just a matter of when. And so that's how I really sort of, to the point, we've talked about, I felt like I was fully embracing the 401k, the HSA, and my brokerage account. And I wanted to then start to invest in real estate with excess capital that I had.
So I want to make sure we talk about that. And I know we've talked about all sorts of other things. But the main thing I wanted to have you come and talk about was your experience with rental real estate. So I guess tell me about, why did you want that to be a line item in your net worth profile? And then how did you get into actually having your house?
Yes, I wanted it to be a line item because I did want the diversification that it brings to a overall portfolio. And so, rental or real estate markets typically only appreciate in value. There is a source of income that is not tied necessarily to the capital markets, which is income from, people who are renting from you. I'd always sort of just felt like it was going to be a good balance to everything else that was going on. If the stock market was going down, if I'm in retirement and I can't draw on my sort of stocks the way I want to and draw down on that because the market's doing something crazy, then I could rely on real estate income. So when it came down to finding a place, that was sort of the hardest challenge because, as you mentioned, Charlotte was just financially out of reach for me and for what I wanted to do at that point in time. This is also my
Well, to make
first.
it cash flow, right? And what I mean by that is rental income coming in, you want to have enough to cover the mortgage, to cover if you're paying utilities, to cover the one-off repairs, and to still have positive cash flow coming in, because that's the point of it, right? And it can be hard when the purchase price is so high. That means your mortgage is high. The rents here have in the last few years, I think have increased a lot, which we can have a whole other conversation about whether that's right or wrong, but it is a fact. And so to make it cash flow, you have to be able to buy something at a good price, to your point, which is difficult here. Not impossible, just difficult.
I have taken a lot of risks in my investing and going out and, my interior design business. I don't try to start from a risky position. And so what I really wanted to make sure was if I had to do something with the house and could not have someone staying there, right? If something major happened to it and I could not have someone staying there, could I personally pay and support the mortgage without having that overly undue burden, right? If I have a bad tenant, I don't want to get into this position where I have to choose between the bad tenant or making my mortgage, right? And so I really wanted to focus on, for me, what was important was the mortgage payment, and was the mortgage payment what I personally could have it, needed it to be. I've never had to, thankfully, in the 2 years, knock on wood, or a year and a half, knock on wood, I haven't had to deal with that situation. But it was something that was really important to me when I started to focus on where I would want to invest. When I started to think about this, it just felt really out of reach. And so I was actually thinking about holding off and probably waiting until 2025. And then my realtor here in Charlotte actually did a sort of a 1 hour workshop about out of state investing. And it was like, well, duh, you don't have to restrict yourself to where you live, right? In order to invest in the markets. And she thankfully did a ton of work and sort of identified cities that are more amenable to out of state investing, particularly if you're sort of thinking about the Charlotte market. And so it didn't take long to sort of narrow down on the Midwest. It didn't take long to narrow down on St. Louis. I also just wanted to also be in a place where if I needed to do a day trip, I could easily get there, particularly for my first property. So I did a lot of things that were more measured, but ultimately the whole goal was to get in there, to get sort of one property under my belt so I can fully understand what it is to be a real estate investor.
So you did it. You bought the house, you put some work into it, furnished it. If I remember correctly, you were originally thinking about doing Airbnb, right?
Yeah.
And then you didn't.
Yes. So, it's funny because not doing Airbnb was probably the best decision that I made. And I'll tell you why. When I did all the work to start it up, to sort of, buy all the furniture, go there, find a handyman, I realized how much work it would take to deal with churn of renters, to deal with people who didn't care about your market, your property, because they're there for 2 days and that's it. I personally didn't want to deal with that, with everything else that I had going on in my corporate job, my interior design business. I just couldn't imagine dealing with the Airbnb approach, right? And so
Or you'd
then
have
the
to
next
pay
question,
somebody to do it, and that would take
right?
all of your profit, basically, to pay somebody.
That is exactly where I was going. So my next thought was, well, I can automate. How do you automate it? How do you have someone else manage it? And so I really looked around, and everyone who does property management in this market for in the St. Louis market for Airbnb charge a lot of money naturally. And so this is where the example of looking at gross revenue versus your cash flow and what you're netting is important, right? So the gross revenue would have obviously been higher with Airbnb, but what I was netting would not have been as high because of all of the overhead that I would have had. I think the other thing that I really thought about was my time. So, whatever it nets, right? It probably nets about the same. Which one did I spend 2 hours on versus which one did I spend 10 hours on to get to that net margin or that net profit? And so it just became very clear to me that it wasn't for me, a cash flow sensical idea.
So
Um,
you went with the medium term rental option, right? Because you can, I think, charge more. These people are being like subsidized by their companies, or if they're at a hospital, right? And so you can charge more, maybe not Airbnb rates, but then you have, a longer term tenant who cares more, less turnover, less
yes,
repairs, less maintenance, less cleaning, less management fees, right?
yes, yep. So there's it's literally medium term. So it's revenue wise in between long term and a short term or an Airbnb. There is not the expectation that you're restocking because they're living there long term. So there's sort of not that churn. The cleaning, there's not a churn there as well. So you can charge, it's really dead in between the long term and short term markets in terms of what you can command in rental income, but it just makes it so much worth it to have someone there that is there for 6 months. You don't have to, find the next tenant or market for the next 3-day opportunity. And I think the other thing that helped me when I look at investing in things, I take stock in like what other people are saying as well as my lived experiences. And, when I was working on getting this unit ready in St. Louis, I was driving around and I was like, wow, there are a lot of hospitals in this area. Subsequently, my handyman was literally walking me around the neighborhood and telling me like where other people were using their property for doctors and nurses and other people who are coming in for 3 to 6 months because of the shortage of the medical professional market in St. Louis. And so it just sort of made it very clear that medium term was the right thing for me. And then, I don't know if you've seen this, but I've seen a lot of like, particularly in the US, people are going back to hotels. The cleaning fee for
Yeah.
is ridiculous. This is ridiculous, so
Well, and there's the horror stories too of like,
yes,
you just can't. Yeah.
yep. The privacy piece, when I'm in the US, I rarely stay at an Airbnb. It's usually a hotel. So all of that just sort of like played a role into just saying, you know what, the short-term market's not my thing. Not really interested in long term because I do want it to cash flow a little bit, have a little bit more healthy cash flow. And so medium term made the most sense.
Yeah. So I appreciate getting to pick your brain a little bit. I think it's great for people to hear. I have a suspicion that most of my listeners probably also are thinking about like what things to invest in and just considering different options. And it's just great to hear from somebody who is just a normal. I mean, you're not just normal. You're intelligent. You obviously have business experience, right? But like you're also a human being like the rest of us, and you're not like some guru that's like doing all these crazy things. So tell me what is next for you and all of your ventures.
As of right now, I'm really looking at, you and I have talked about this, but purchasing a business. And I don't know if it's going to be quote unquote boring business or not. We will see. I've gotten more comfort in owning up to this idea that I am an entrepreneur, which 2 or 3 years ago, I would have never said I would do. And so, I want to start to really think about other ventures as part of my goal, my net worth goal. I'd only really thought about investments and traditional investments and investment properties. And so more to come, but I'm hoping that by the end of this year, I will have another business under my belt.
Yeah. Well, if you buy a business, we're going to talk about that too.
Okay, that works.
Shameless plug. Tell me, what is the most beneficial part of working with me and my team?
Of course. That's an easy plug. I think your team just makes it so simple to understand what's going on, feel confident that my finances are taken care of. And, I think what's helpful for me is spending time with you in our sort of planning sessions, thinking through what's the next thing, what is the next venture, what is the next opportunity. You've pushed me a lot, particularly on, for example, I think we had a conversation earlier this year where I was like, well, my 401k at this point, like, is being fully maxed out, like not even my personal contributions, but my employer contributions, which is, I never thought I would get there. And you were like, is that really the next best way for you to spend your dollar? Right. And so I would have never really thought about it that way without you. And that sort of led me to think through other business ventures. And so it's more than just the sort of tax and accounting that I can not do, but it's more about really looking at my holistic picture and defining what's the best plan to use my dollars and invest my dollars wisely. So
I love that. I'm so proud. Thank you. Thank you for sharing that. Okay, my last question that I ask everybody on here, which you may know that I do this or not, but it's always, tell me a life upgrade that your business has afforded you, something fun that you get to do with money that you maybe wouldn't have otherwise.
I don't know if I would consider this a life upgrade, but mastermind groups, I would have never been able to think about affording those if not for my business. And what is the upgrade for me is that it takes like 10 years of learning the hard way and condenses it to a year of hearing from other people and knowing to not go down certain paths. And so in a sense, it is a life upgrade because it accelerates, if you take the learnings, it prevents you from making really dumb decisions. And
Yeah.
that has been what I've invested in my business. As of this recording, next week we'll be in London going to see Beyonce.
Oh,
On stage seating tickets. And so that I would consider that also an upgrade of
that's a major life upgrade. You
yes,
get to like be sprayed by her magical sweat.
exactly.
That's funny. No, actually, you know what? That's a good point. And I know I don't want to like keep going on, but this is actually a good point that you said about you have a business and it has maybe in your corporate life, even if you had done investing, you may not have felt comfortable financially to invest in a mastermind, which is not going to be cheap. Right.
Right.
And so, because you have a business, I think it opens up a world of tax write offs, right? Because you have a business purpose for the mastermind. And so, you get a nice discount on that. So I think that's actually a really good point too. And I think that's a life upgrade.
Yeah, of course.
But I think going to London for the Beyonce concerts, like a definite upgrade.
The last thing I'll say on that, to your point on that, like, and you know this, I've gotten, since I started my interior design business, I got a promotion at
Yeah.
work, more responsibilities, right? Which is insane. But being an entrepreneur has actually, I think, helped me be a better leader in my day job. And I think a lot of people, it's sort of counterintuitive. You think it's going to take attention away, but it actually makes you stronger. So the mastermind course, a lot of those concepts are not just helpful for my business, but also for my corporate job.
Yeah. That happened to me like when I started my side hustle, when I really like went full on with it and like started treating it like, a business as a side hustle, I got promoted and then I got promoted again,
Yes.
right? Even I was like, I don't want this, but they
Yeah.
were like, you're getting it anyways. And so it was really interesting that I think it just up levels you in everything you do. And that like, if you're at that sort of higher vibe, right, like stuff is going to come to you.
Yeah.
So I think that's fun. Okay. Where can people find you, follow you online, like see your journey, all of that stuff?
the best place to follow me is on Instagram at Sims and Co Design. You can find my real estate investor journey there. You can find my interior design projects. I'm starting to explore a little bit more, telling people about my full-on venture aspirations. And so all of that will be found on my Instagram.
Awesome. We'll put the link there in the show notes so people can go check you out. You have a bedroom that you did recently that I love. And I'm like, I want this in my bedroom. We'll talk about that another day. And well, I just appreciate you coming on. Like I said, I appreciate you letting me be nosy. I mean, I know a lot of these things, but I think it's just really beneficial for other people to hear that. So I appreciate your openness and willingness to talk about it, because I think it's important for us to hear stories of women and, Black women like doing these things, owning property, like having businesses. I think it's great. So thank you for being here.
Thank you. Thanks so much.
All right, y'all. I hope you enjoyed it, and I'll see you next week. Thanks for listening to this week's episode. Now, I want you to go take some action. What's one thing you can do this week to create more profit in your business? Send me a DM on Instagram at YoungCoCFO and share your action item with me. If you have a question or topic you'd like me to dive into, or if you're feeling empowered about taking charge of your finances, let's continue the conversation. Go to profitandprosper.co to submit a question or topic for me to talk about on the show. And because we all profit and prosper better with friends, please leave me a review on Apple Podcasts, subscribe wherever you listen, and share the episode. Make sure you tag me at YoungCoCFO on Instagram so I can give you some love, and I'll see you in the next episode.